Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So yesterday we had the Bank of Canada meeting come out, and a couple hours later we also had the Fed come out and talk about monetary policy there. So in my humble opinion, the Fed meeting yesterday was completely boring. There was nothing there that I felt was very important. In fact, the Bank of Canada meeting was more interesting for me. You can check out that video that I did yesterday, because that also, what Bank of Canada did yesterday kind of sets the path for other central banks out there, right? We know that Canada has been the first mover here against the U.S. when it came to hiking rates, when it came to cutting rates first, and now even with ending QT and QE, right? So we can expect the same pathway for the Fed. But let's talk about a little bit about the Fed here. So the Fed came out with the statement, did not cut interest rates, left it where it is, fully expected, okay? We don't expect aggressive rate cuts this year from the Fed, especially if the economy and the data continues to be strong and resilient. Now, if we heard from the Fed, if we do see the unemployment rate or jobs end up being worse than expected, then yes, they're going to step in and do something about it and start cutting rates there. But if not, and we expect things to be fine, then we can expect that we could see this hold for some time until maybe, I don't know, summer or end of the year, right? Now, when the statement came out, the stock market initially sold off. We got the bond market to sell off initially as well, basically on these keywords that were removed from the statement. So what were those keywords? Those keywords basically said progress towards inflation goal. So the progress towards inflation goal was removed from the statement, and that caused basically the stock market and the bond market to initially sell off there. And Powell was asked about that, and he basically clarified and said, we did some language cleanup. The removal of that meant nothing. It was nothing to me. It didn't mean any signal, right? And what basically got the markets worried is that basically means that they're going to start, pausing or maybe hiking, and it was seen to be hawkish. But Powell cleared it up and said that had nothing. It was not a signal at all. So when you look at everything that Powell said, it was just as expected. We know that, okay, he's not gonna cut rates. We know he's gonna be on hold because he signaled that. So here are a couple of points maybe that you might be interested in. He basically said inflation has moved much closer to our longer run goal, though it remains somewhat elevated. So still keeping it, rates where it is, not cutting aggressively to still achieve the inflation target, although it's moved much closer to their target, to their goal. 2024 GDP looks to have risen above 2%, so that's good for growth in the economy. Investment in equipment appears to have slowed late in the year, but was solid 2024. Labor market conditions remain solid. The job market's fine. Unemployment rate is stabilized. It remains low, so nothing to worry there. Economy is doing fine. PCE, which is an inflation metric, rose to 2.6% in 12 months to December, and core 2.8%, which is why they're holding and not cutting aggressively. Risks to achieving our goals are roughly in balance. We do not need to be in a hurry to adjust policy stance. So here's another thing. Okay, this is expected. Okay, we heard this. And the stock market, I have no idea why they were panicking on this. We do not need to be in a hurry to adjust policy stance. We're not in a hurry to cut rates. We're not in a hurry to pump liquidity and do QE and all that. There's no hurry of that, which we know. We heard that last year. So that was seen as hawkish. I would say that was seen for me as expected. Policy is well positioned. Review of policy framework will wrap up by late summer. The comment on not being in a hurry is a key one, suggests a low likelihood of a move in March. Expected, right? We don't expect anything of Q1 of any kind of rate cuts unless the job market is just crashing. So the markets, how do the markets react? The bond market kind of picked up a bit afterwards. When the Q&A came out, the stock market was so choppy, was ugly, especially the S&P and NASDAQ. We did see a rally, but it came back down. It was just a mess. It is nothing. It was a nothing burger. Now, when we look at the Q&A, the press conference, some key points there. He's basically said, I had no contact with the president, because there was a question about, did the president contact you? Because we know Trump wants to cut rates aggressively. In fact, after the meeting, Trump did come out and say that, Jerome Powell is doing a poor job, and we're going to drill baby drill and bring prices down, and he should be cutting rates aggressively and blah, 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 right? Again, nothing big there. Policy is less restrictive than when we began cutting. We don't need to see further weakening of the labor market to achieve our inflation goal. Basically hinting towards that if the labor market's getting worse off, then yes, we're going to cut rates as it's needed. Assessment on policy hasn't changed. We did some language cleanup, which I already talked about. We seem to be set up for further progress on inflation. We are going to want to see that. So, inflation is coming down. We want to see further progress, hence the hold. So again, expected. Now, what do we see the markets doing today after post the meeting? S&P 500 is picking up a bit here. NASDAQ is also following a bit, still, under pressure among the other equity indices. But the Russell and the Dow is they're the stronger ones. So what does it tell me? The Fed meeting was just kind of nonsense. And what the markets want to know is, what the hell is Trump going to do? That's all. Where are we going with these tariffs? And there's still fears around this tech and DeepSeek, and with NVIDIA even today still under pressure. There's uncertainty in tech. That's why tech is lagging behind. And that's why we're seeing the Dow pick up a bit, because money's flowing out of tech, going into the Dow, going into the Russell, kind of spreading out the risk there. And then what's really to look forward is just those Trump tariffs that we expect actually this Saturday, Feb 1st. Maybe he's going to announce something about Canada, tariffs on Canada, Mexico, China. Let's see what happens. I think that's the big thing here. And I think that's what also the central banks are doing. They're waiting to see, right? Like I said, Bank of Canada's meeting had more insights than the Fed meeting, and was more interesting because you could see the worry, you could see the expectation, and they were, blatantly honest that, Bank of Canada said, we don't know, we can't expect what Trump is going to do. Maybe he will hike tariffs, maybe not, and we have to, adjust accordingly. We have to react accordingly. Therefore, that's why in the projections they couldn't put anything in the projections saying that, this is going to happen for sure, and project, ugly GDP and this and that, because simply you don't know, right? So again, nothing burger, and the markets are just kind of just whatever, and other than the Dow, and I like the Dow, and the Dow continues to be the stronger index, and I think we could see the Dow reach to all-time highs again, as long as, Trump doesn't mess up anything. So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon, and be notified next video, and I'll see you guys around. Cheers. Bye.